Is a big stock market drop about to happen? As on Friday, we defended a prior low with the market just barely sweeping below it and coming back up. However, is the Fed finally starting to get a little bit nervous about what's going on? Now, we keep talking on this channel about the fear and greed index. Right now, we're at 22. We're still over into extreme fear. And this is why this time could be a little bit different. We come down here and we look at what the fear and greed index actually looks at. We can see the market momentum, it's in fear. We look at stock price strength, extreme fear. We look at stock price breadth, extreme fear. Put call ratio, extreme fear. The only thing that's in neutral right now is market volatility. Even safe haven demand is in extreme fear. However, just because we're in fear does not mean the market necessarily has to go down. We come over real quick and we take a look at the volatility index. We can see on Friday, the VIX was spiking up. Looks like the VIX made a high somewhere around that $23 price point. However, look at the MACD indicator on the daily chart. It is crossed to the upside. And I warned you guys in Thursday night's video that on Thursday, the VIX was up more than 10%, which implied that either Friday or Monday would be an update in the markets. Now, depending on what market we actually look at, for instance, the Dow Jones was down 309. The NASDAQ was up 30 points. It shows right here the S&P 500 was up $3.38, and the Russell 2000 was down 0.69. Now, if we come over and look at the S&P futures real quick, notice on Friday, we actually closed with a green body candle. It actually closed slightly higher than where it closed the prior day. However, not by a lot. And we did see as the market was pushing down that buyers did step in, but we look a little bit lower. Notice we have the MACD indicator cross to the downside. We couple that with the fact that we're still over into extreme fear, and we look at the most recent investor sentiment survey. This week, the bulls dropped from 38% down to 31.6. But what's even more eye-catching is look at the bears. They went from 36.3 all the way to 49.1. That was a huge increase in bearish sentiment. Now, one thing I also noticed out here when we look over here on Friday, we look at advancing issues versus declining. Notice on Friday, we had more issues declining, 56.2%. And then when we look at the sectors across the board, we only had 3 sectors in the green: energy, technology, and real estate. It's kind of funny because technology was a big laggard out there, but it was able to come up pretty darn good. Even if we look at the 1 week performance, healthcare, energy, basic materials, and consumer defensives, every other sector was in the red. So with energy being up, if we come over and we take a look at crude oil, we can see on Friday, crude oil spikes right back up once again. And the MACD indicator is still trying to get a bullish cross, trying to get back above the zero line. Now, something we do want to keep an eye on is we see this article right here: oil prices surge after Ukraine strike on major Russia export hub. However, it's not just that where we could possibly start to see crude oil spiking even more, but over the weekend, we see this real quick where Iran seizes the ship over in the Straits of Hormuz, which could be a problem in the future. Maybe not right here, right now, but sometime in the not too distant future. And then we look at articles like this. Banks just sent this update signal about the economy. Here's why investors aren't buying it. And basically what it goes on to say is the banks are not setting aside as much for losses. And basically what this article highlights is most banks set aside less money to cover troubled loans last quarter, despite some of Wall Street's biggest name ringing alarm bells. And we've been talking about this. Jamie Dimon's been talking about, there's much more cockroaches out there or something to that effect. And then remember last week, I brought to you guys this article as well. Subprime auto delinquency, worst in 30 years. Now, keep in mind, that means it's worse than it was during the pandemic. It's worse than the great financial crisis. And this could all spell trouble for stocks in the not too distant future. Now you might say, well, Mike, I don't care about that. I Uber everywhere I go, so the car is really not a problem. Well, what about right here? More Americans are losing their homes as foreclosures jump 20%. And to me, this does not sound like a healthy economy. And keep in mind, they've been hiding the labor report from us. However, this week, we have some big ones out there. On Wednesday, we're going to get the FOMC meeting minutes. Then it appears at this moment that we're going to get the labor report on the 20th. So we'll see, is this going to actually show that the labor market is more robust than what a lot of people could be fearing? And this article right here also is a very good beat on the market. Stocks are caught up in a powerful rotation. Here's what could deliver a shock. And what it basically goes on to say is A smooth stock market on the surface is masking nerves and turbulence, and we know there's a lot of nerves out there. Why is that? Well, we see right here, the New York Fed met with banks over key lending facility, and this was an emergency meeting where the Fed is starting to freak out that, maybe there could be more liquidity problems out there, and what is going to be that black swan event that could get stocks drastically crashing lower? Because a lot of traders are complacent, especially when we look at Friday's price action. It was only 1 week earlier where we had that big old hammer candle. The market bounced up. And on the NASDAQ, we bounced up right between the 61.8, 78.6, and now we're right back down there. Now, a lot of traders say, Mike, that is going to be nothing more than a double bottom. Well, I do want to caution you guys. We did break the 50-period moving average the first time. We broke it the second time, and on both attempts, we were able to close above it. But what if this time is different, where we come up a little bit higher, form in another lower high, and then the market starts cascading lower? Keep in mind, we have a high, we have a lower high, we have a low, and we have a slightly lower low. Now, on the lower low, we did not close lower than the prior low. So depending on if you want to look at an intraday low or a closing low is going to determine on if you're seeing this as a potential downtrend in the market. Keep in mind, we still have this A to B equals C to D pattern that could be in play that would take the NASDAQ all the way down to 586.11. Now, we'll look at some options data here in a bit and see if we can confirm some of those lower levels down below us. However, before we look at these next few charts real quick, I want to remind you guys right now, Take Profit Trader is 40% off all their evaluation accounts. Best yet, zero activation fee. Take advantage of this offer. Use the link in the description box down below. Use code epitome at checkout. So with all the nervousness out there in the markets, we need to pay attention to some of these markets. For instance, look at the dollar index. On Friday, dollar index did have a wick on the bottom of the candle, a little bit of a wick on the top, kind of a small body candle. If we start seeing the dollar index start to rally up, this could also be a problem for stocks. But it's not just the dollar index that we want to pay attention to. We also want to come over and look at the 10-year yield. What is it doing? Well, on Friday, we see the 10-year yield closing near the session highs. Very small wick on top of that candle. We zoom this out here a little bit. Here is a prior support level. 1, 2, 3. We break it. Then this level starts to act as resistance. Right here, rejects back down, comes back up, rejects down again. Now, are we building calls to go ahead and break and start to go higher? If we see yields starting to spike, that is another troubling problem out there for the banks and the overall liquidity situation in the markets. Now, if we look at the 10-year versus the 2-year spread, we also want to pay attention to this. Once we see this start to steepen, that's normally when the stock market becomes under pressure. Look right back here in April when the market actually bottomed out. Look at how steep it was between the 10-year and 2-year yield. We've seen it really spiking on the way up. If we start to see anything like that again, that's going to be a trouble sign. Pay attention, watch out. Now, if we come over and look at the SPY versus HYG, the bottom graph is going to be HYG, high yield bonds. The upper graph is going to be the SPY. And as we look at this, we can see the SPY is clearly making lower highs. However, it has not made lower lows. And look down here, HYG came right back down here, almost taking out this swing low. And again, we start breaking down there, also showing us that risk sentiment in the market is really starting to come off. We can come over and take a look at the Dow Jones versus the Transportation Index on the weekly chart. Notice we get like a shooting star type of candle as the Dow was able to make new all-time highs this week. Now, the Transportation Index, we talked about this last week, was finally able to break this declining trend line. However, if we get back down below it, that could also spell trouble out here for the stock market. Now, we talked about risk assets coming off by looking at HYG. Well, if we also come over and look at Bitcoin, this is something we've been talking about on the live streams. We've had this level mapped out, 93,566. On Friday, we almost made it all the way over there, hitting that level. We just barely missed it. Now, with Bitcoin showing signs of weakness, is this an overall economy and stock market risk off scenario? So I want to pay close attention, and I'm going to be watching Bitcoin before the markets open up on Sunday night to see, does Bitcoin continue to show signs of weakness? If so, maybe we end up getting a gap lower. Now, we talked about the dollar index and yields. Well, what about the precious metal gold? We come over and look at gold real quick. Gold basically forming a lower high, and they did it right around a prior structure breakdown point. Keep in mind, we had this level marked off for quite some time. We had this double top right here at the bottom over here, candle wick right up here to the candle body. We extended that over to the right, and then we even get a miniature head and shoulders pattern. Left shoulder, head, right shoulder here, and it ends up playing out perfectly. Now, on the 4-hour chart, the MACD indicator is still crossed to the downside, and I'm still in the camp where I think we are going substantially lower. We also rejected right up here between the 61 and 78.6 Fibonacci retracement levels. So now let's redraw out this potential A to B equals C to D pattern from the highs all the way down to the low and then back up towards this recent high. Now, if we zoom this down here a little bit, that gives us a price completion right down here about 37.53, which is substantially lower. I've been watching for that $3,800 price for quite some time. Now, in the event that we can come back up and take out the high right up here at about 42.52, then I'm going to be looking for gold to possibly go all the way up and make another new all-time high. And speaking of gold, gold's move in lockstep with US stocks could point to a brewing market danger. And again, everybody wants to avoid all these warning signs out here. And all I'm saying is trade the chart in front of you. Let's not just be blindly, a bull or blindly a bear. Let's go ahead and follow the supporting facts. Come over and look at the SPY real quick on the weekly time frame. And I want to draw your attention right down here to the MACD indicator. Notice it's just about to get a bearish cross. And normally once we get a cross bullish or bearish, normally that's going to play out for several weeks. And keep in mind, one of the areas I'm watching on the weekly chart would be a retest right around 613.48. Also, it correlates right with a minus development area over here on the volume profile. Now, for all intents and purposes last week, the high was lower than the prior week's high. The low was higher than the prior week's low. And keep in mind, with an inside candle, what do we expect? The next candle, we expect a breakout or breakdown from this pattern. But again, we got to be mindful. Is the first way we break end up being nothing more than a trap? We drop down to the daily chart. You can see we got within the wick, but unlike the NASDAQ, we were unable to break that low. On the daily chart, we can see the MACD indicator is still crossed to the downside. And notice, I want you guys to pay close attention to this. This is a subtle difference, but notice as we came down on Friday, we did not make a new low, but we correlate where the MACD was 1 week earlier. Look where it was. Now that we did not even go down and make a lower low, the MACD indicator is already making lower lows. Now, as I look at this chart, there's a couple areas I want to focus on. One, if we can break this high volume area right here, can we potentially flush into this minus development area? We can also start to draw an A to B equals C to D pattern. We start off from the all-time high, down towards the low, and then right back up here towards this retracement high. Now that gives us a price completion right here about 656.92. Well, if we come over and look at the options data real quick, I want you guys to pay very close attention. There could be problems brewing. I'm going to show you guys exactly where you can see a big acceleration in the market. So the closing price on Friday was right around 671, 672, somewhere in that ballpark. That's right up in here. But look what we have right down below us. And we were talking about this last week as well. We have a lot of gamma exposure right around that 660 strike point. If we start breaking 660, watch out, that opens the door down to 650, all the way down to 640. We have a lot of gamma. It could be a fast move down there as the dealers would be forced to hedge. Same thing can be said to the upside. If we can start breaking above 680, then we have a path right up here towards the 700 strike point. But let's go ahead and kind of explore this real quick. Where does 660 actually come into play? 660 would be right up here, right just below the low from 1 week ago. But then we come down to about 550 or so, and even all the way down to 540, that would be substantially lower. And if we look at this on the weekly time frame, and as we look at that, that would be enough to not only complete the ABC pattern on the way down, but actually goes substantially lower. We do have kind of a high volume node right up here, right down here, about 644 or so. And that could be right where the market's trying to head if indeed things start to get ugly. Now we look out here on the 4-hour chart. MACD indicator is crossed to the downside. Then over here on the 30-minute chart, what do we got going on? Well, we can see on Friday, we closed with a P as in Paul shaped profile. We closed near the lower end of value, but we closed in the upper end of the range. And this could be critical, right? One, are we able to break out this consolidation to the upside up here at this upper level? Or do we start to break back down lower with the P-shaped profile? If we start trading below value or low, which comes in at 671.24, we're likely going to explore the lower third of the range. Now, one of the areas I like, kind of this high volume node at about 668.15. We come over and look at the futures markets real quick. We start off looking at the weekly profile along with the composite profile over here on the right. Now notice we are closing slightly below value area low, which comes in at 67.80 and a quarter. Rule behind that is whenever we close outside of value, we expect the next 1 to 2 weeks, since we're dealing with a weekly volume profile, we'll come back and visit that level. So maybe we do that even Sunday night. Maybe we get a gap up, get everybody excited. Woohoo! Go ahead and run the markets up. before they rug pull it on the way back down. The point of control on the weekly is up here at 68.73 and a quarter, and value area high will be 68.88.75. Now notice where we drop down to, right near this high volume node on the composite profile on Friday. And a lot of times the market's just going to ping pong back and forth in between the high volume areas on the profile. Now, if we do zoom this out a little bit, do we have any minus development areas below us? We have one, but it's way down here. I'm not really thinking about this lower area at this moment. 6,400.75. I don't see a path where you make it down there this week unless the labor data really just falls off a cliff. But to think the S&P is going to drop, more than 350 points this week, I just don't see that being in the cards. Now, maybe the market will surprise me and be a little bit of an overachiever out there. Now, on the weekly time frame, let's go ahead and map out this A to B equals C to D pattern. We have the A to B leg, then we have the B to C leg being the corrective leg on the way up. That gives us a price completion right down here around 6,600. And I kind of like that because we have a minus development area all down here within the profile. And some of the key areas would be 66.19 and really down here about 65.82. And then our ABC target falls right in line between both of those levels. Now we come over and look at the daily profiles real quick. Notice we're able to take out another untested point of control on Friday, 66.97 and a quarter. Now we did close right near the point of control, and this is going to be critical. We have a slight lower high that was set. Look on the 30-minute charts on Friday, and we're going to see, do we continue to come right back down lower? Now with this profile, I want to mark off some of these low volume nodes, 67.28 and a quarter, and then right down here about 67.05. If the market comes down towards these levels, we want to watch, do we see signs of the market firming up? Because this could be a logical area where the market tries to find a little bit of support and then bounce and run a little bit higher. However, if we start breaking below the value area low right here, I want to look at that next minus development area. Then I want to look for the lows on Friday. Anything below that price point, we got to come back over and really give the consideration down here towards this ABC pattern that we mapped out off the weekly volume profile. Now, before we look at the NASDAQ, let's not forget this week is going to be a major week out there for earnings. Look on Wednesday after the bell, we have Nvidia, and we're going to learn, is AI dead? We can see the market's priced in. Nvidia will move plus or minus 8%. We also have Home Depot, PANW, Lowe's, Target, Jack in the Box, Wix. So we'll see which of these companies can move the markets. Now we come over and look at the NASDAQ real quick, the QQQs. Notice down here, if we look at the MACD indicator, it's just about to cross to the downside. On Friday, we did make a lower low than what we saw from the prior week. However, we closed back up above it. Now, this is a little bit different than the SPY. The SPY had an inside week. The NASDAQ did not. Technically, we made a new low. Coming over and look at the daily chart real quick, we've already mapped out that ABC pattern to the downside. However, can we confirm this lower level by looking at options data? Well, if we come over and look at where is all the gamma exposure at, we can see right down here, right around the ballpark of 600, we have a lot of gamma exposure. We actually have quite a bit, even at 594 and right around 590 as well. And we actually closed at 608. So as we look at this, if we start breaking down below that level, watch out, we can see the NASDAQ really start to drop fast. We look at what the low actually was on Friday. The low on Friday came in at 597.17. So it's really no surprise as we look at this, there was a lot of hedging take place, but once you start to bust through that, that's where you can get those waterfall effects straight to the downside. And if we look at this chart, where do we see a majority of the gamma exposure? Well, I gotta be honest with you. To me, a majority of the gamma exposure is really to the downside below us, and one that can act as a magnet. But if we start to break below it, watch out, that's going to open the floodgates to the markets having a rapid decline down lower. Now, if we also look at this real quick, we talked about the gamma exposure right around 590 or so. Well, what does that correlate to over here? Well, 590 would be slightly above that ABC pattern to the downside. So we need to break through that 590. If we break that 590, that could open the door and we get that faster move, maybe going down and completing the ABC pattern to the downside. On the 4-hour chart, MACD indicator is down below the zero line, so we got to be careful. But we can see we had a high, we had a lower high, lower high, lower high. And if we look at the lows, well, technically we had a low and we have a slightly lower low. However, it was not a lower low on a closing basis. Now, if we come over and look at the futures markets real quick, what do we have out here for the NASDAQ? Well, the NASDAQ, we overshot this low. Now, short term, that could be bullish in the market. However, it could also be a fake out. We get everybody excited saying, you know what? We're going to rocket to the moon. One of the areas as I look over here on the composite profile is this minus development area right around 25,403. Also, if we were to pull a Fibonacci retracement of that last really leg down we had in the market, notice the 61 and 78.6 fib level kind of sandwiched right between that minus development area. But it's going to be critical. Do we start breaking the high from Friday? If so, this would be the next area I'd look at. Also, if we look at the weekly volume profile, you can kind of see we have this whole area as a minus development area. Now, we talk about this all the time on the live stream. The first time we come up into it, what do we expect? The market to either consolidate or reject down. We can see right there, we did get a reaction the first time we came into the minus development area. Second or third time into that area, that's when we really start to look for the market to break beyond that price point. And notice we did close below value area low from the weekly volume profiles. 25,197.75 was value area low. The point of control was up here at 25,611.75, and value area high was up here about 25,761 and a quarter. I would expect that this week we'll probably come back and visit value area low, but do we just simply come up here and then reject down to the downside below value area low off the weekly? I like this high volume node right here about 24,836. Anything below that, I would look for the markets to come back, rerun the lows, and then really anything below that, I like this area right over here. This big nasty candle we had back here, or maybe even before that a little bit actually, 24,313. Then this big candle. And then let's not forget, we have two untested point of controls down below us. Now, I'm not saying we're going to get those this week, but they could be targets in the near future, especially if the credit markets continue to deteriorate from the current levels that we're at. Now, we come over and start looking at the daily profiles. What do we got going on over here? On the daily profile, we have value area high at 25,287.75. We're closing right near the point of control, which comes in 25,136 and a quarter. Then we have value area low down here at 24,948. In the event we start breaking above value area high, that's when I really also want to turn my attentions towards that weekly area we talked about, that minus development area, the first level we talked about, right up over here. This whole area right up in there. Right around 25,415, 409, 408, somewhere within that ballpark. However, if we do something like this, where we open up, we start trading above value area high and we start coming back down, that's when the point of control then becomes my target. Then before we get the value area low, kind of this minus development area down here, 25,044, then value area low, anything below that, looking down here back towards the lows on Friday. And once we flush those lows, we're looking back over here to the weekly volume profile chart and looking at those additional lower targets we spoke about earlier. Now, if you guys trade with prop firms out there and you want to learn which prop firm is best for those traders that trade with micro futures contracts, then you want to make sure to watch this next video right here.